John Fogerty coming to Las Vegas pretty soon. I was looking online the other day about getting tickets. They weren't that bad for a decent seat. I think they're at the Wynn Hotel over the next few months. John Fogerty without the Credence guys, just him. Yeah, he's phenomenal. Listen to him. Listen to that. You can't understand a word he says, but
boy, is he good.
Yeah. Born in a bayou. He's actually from San Francisco. So he sounds like he's down in the bayou, but he's a San Francisco guy. 844 Ray Show, my special guest, Gene Pastula. And you know, Gene, before the break, we were talking about studies that have come out about seniors and how seniors get lonely, and the lonelier they are, the less healthy they become. And I brought this up because you're my go-to resource when it comes to long-term health care. And you have ways for individuals to mitigate this risk without having to really put up any money, because the biggest objection is, I don't want to spend any of my hard-earned money with Gene Pastula to take care of long-term health care. You have the floor, buddy.
Yeah, well, you know, it's not a matter of not needing any money. And you know, it's not like it's free, but it's more about simply moving money you already have. Now, if you have no money, other than what you absolutely need to live on day to day, your options are are nil, other than, you know, hoping that you'll never have to need that kind of care, which is more unlikely than not.
But unless you have zero assets or very near zero, the government doesn't take care of you.
Well, yeah, but it doesn't take long once you start to receive care to get to zero. I mean, it's really, really expensive. So, you know, so you do have the government programs they're not the kind that you would sign up for intentionally.
It's not the congregate living.
No, it's welfare. I mean, it's a welfare type of situation. But in any event, but those who have enough money that they can decide not to spend it on long-term care insurance, if they wish, they have it, and it's a decision they have to make. Some people don't have enough; it's not even a decision. And some people have enough that they say, I'll just pay for it myself. You know, I'll self-insure. I'm not afraid of long-term care, and it's not going to happen to me. And if it does, I'll just pay for it. Well, you know, that's easy to say when you're 55 and 60 and 65 and in good health and all the rest of the stuff. But I tell you what, when you start to have to write the checks for stuff like that, automatically that whole concept goes out the window. And boy, it would really be nice if you got a reimbursement check every month for $4,000, $5,000, $6,000, $7,000. And it certainly would be nice to know that you have that extra money coming in that can give you the options, for example, of living like my mom does in a really nice assisted living facility, extended care facility. So, or having someone at home, which is what I'll do, because I got that taken care of.
You have wide hallways for your wheelchair and all that stuff?
I have everything. It's all there. I mean, you know, it's a fairly large. I mean, not overly. I mean, it's not that big a deal, but it's a house that is all one level, and the doors to the bedrooms open up like this. There's two, you know, doors wide. I mean, you know, it's interesting. This is the first time I've ever thought of it, the concept of having somebody come in and take care of me. I mean, that wasn't our intent. But the point is that if you have the choice and if you have the money, and that's the thing, if you're willing to spend the money to make your lifestyle that much better. Now, getting back to the thing about the loneliness and all the rest of the stuff, that's just, you know, that kind of just goes without saying almost anything, because people who are lonely, who feel lonely, are depressed, and depression breeds poor health. You know, you don't maybe take care of personal hygiene like you should. You maybe don't cook for yourself or eat right or what have you, and it all comes together. If you have someone that is able to come into your home and take care of you, then then it's a little bit different.
Okay, talk about linked benefits, because
Yeah.
what I love about this is it's really a no-brainer, no-risk way to take care of your long-term care at virtually no cost, because most of us have emergency money we're never going to spend.
Well, the key about it is, as opposed to regular insurance, where you either use the benefits that you pay for, or you luck out and don't need them, but then all the money you've put in has been spent. In the case of the approach that we use, we actually use a life insurance policy, which of all the insurances out there is the only one designed to pay a benefit for every person who owns the insurance at some point. Okay, so the idea here is we just tweaked it a little bit. This is a long time ago, 25 years we've been doing this, believe it or not, and said, but if you need long-term care, and that means anything from going into a nursing home to assisted living like my mom, or home care, anything of that nature, you can actually file a claim against your own death claim, even though you're not dead, and start to receive monthly distributions from that.
Tax-free.
Tax-free,
yeah.
and so, and if you don't use it for long-term care, or don't use all of it for long-term care, then ultimately you will die, and it will go to the beneficiary of your choice, whether it be a charity or your children, or be there for your spouse or what have you. So the fact that, I mean, it's, when you say it doesn't cost you anything, it's like saying, if I put money in the bank, and I put $1,000 in the bank, it cost me $1,000. Well, no, not really. You just moved it, and you moved it where it would do some interest, where it would receive some interest, as opposed to your wallet, which it won't. Actually, right these days, I guess the interest isn't that impressive.
There's not much interest in the bank accounts.
But these things are, the money that you put into these insurance contracts are credited with 3, 4, 4.5%. And they use that interest to actually purchase the additional insurance benefits that they provide. And there's all kinds of versions of them. I mean, there's the kind where you can simply move a large amount, a CD or something, into an insurance contract, and it forms a cash value, which is similar to what you actually had in the bank. Maybe it's cash and it's money, and you can get it back and all the rest. Sometimes there's a waiting period of a couple, 2 or 3 years before it's all available back to you. But essentially, it's a liquid account, but it supports a long-term care benefit that may be 3 or 4 times the amount that you put in, all tax-free. And a lot of people, I mean, they don't need insurance. I mean, they say, well, I don't need life insurance, but of course you don't. But you need some source of additional money so that you can have the lady come in or the man come in to take care of you in the final months or years of your life, if that's necessary, into your own home, or go into an assisted living facility or nursing facility, whatever it takes, And most of us don't get out of here without having some period of time where that's necessary. And, kids family members can delay that to some extent, but it's not, sooner or later, the check's got to be written in many, many cases. And this is a good way of setting up and creating a legacy for your children. And your motivation is, okay, I'm going to do everything I can to keep my health as good as it can possibly be, so that I end up living a nice, healthy life and passing away without years of needing care.
Gene Pastula, SafeMoneyMonitor.com. This is one of the most brilliant inventions, and Gene Pastula is one of the guys that actually invented this product some 25 years ago. You are brilliant.
I am, yes.
You are brilliant.
My mother tells me that.
That's why you helped write one of the chapters in my very first book on this way back in the year like 2000. Yeah. Gene Pastula, 800-809-6783. You owe it to yourself to contact Gene and find out what this looks like, because it is truly the least expensive way, and it may actually turn out to be a good investment. We don't count on it to be a good investment. We count on it to make sure that you are never lonely if you are left alone. SafeMoneyMonitor.com. Gene Pastula. Thanks, Gino.
You're welcome.
Talk to you again next week.
Okay.
I will be back with emails here on the Ray Lucia Show. Make sure you stick around.